Well, hello there, YouTube. It is I, Big D, coming at you live and in person. Yep, I'm working. Yippee-I-O-K-A. First thing, a little recap on the van. Shocks are on. Everything's doing great. Ride smooth. No bouncing, quieter. Took care of the problem. So if you get that issue where you see your tires cupping, put on some new shocks. Now, to the topic of today, I was asked this about claimable miles for taxes. And there's a million different ways people talk about doing it. Now, I'm going to tell you the way I do it. And that is, well, when I leave home to go pick up the first stop, I have to drive there to get it, don't I? Well, yes, I'm working. I'm not going over there, or I'm not going to Louisville just because I was bored that day. I have to go down there to get stuff. Well, then all those miles count. All the miles loaded going back count. Just like if you were an expediter and you have to say you have to deadhead 100 miles to go pick up the load. Same thing. You count those miles. Now, when I drop off in Kentucky and I drive home from Kentucky home, I don't count those miles. Okay, I'm going home. Those miles I do not claim. Unless I pick something up in Hebron and head up that way with. If I'm loaded, I'm going to count them. And I'll, from wherever I leave and go home from. Now, if I pick up something and say, Cincinnati, take it to Louisville and drop it off, all those miles back, I claim those miles. Why? I don't live in Louisville. I got to go back. So, if you're ending up near your house when you get done from the last stop to your home, you don't claim. Simple as that. Anything else, I'm claiming. I think right now it's 56 or 56 and a half cents a mile. It went down from 58 cents a mile that you're able to claim. Which is the best way to go? Well, you have to figure it up yourself, but for most, it's the miles. 56 and a half cents a mile, you write it off. If not, you got to keep every gas receipt, every maintenance receipt, all those receipts, and then you get to take that off. Now, you will be able to write your phone off. If you set up a room at your house, as a home office to keep your paperwork and everything like I have, I get to claim that room. So how do you do it? Well, you take your mortgage payment, say it's $1,000, you got 5 rooms, that's $200 a month, $2,400. Tax deduction. Other things you can claim, for the most part, you can claim anything related to work. If you buy shirts, of course, your phone bill. If you have to mail your stuff in, postage. Anything like coolers or anything you use for work. I mean, like this here van, the headache rack and all that, I could claim, or I claim mileage to do it the other way. So how you do that is going to be based on what works out best for you. If you own a home, you're going to be itemizing anyway. I'd be sure to take the mileage deduction. And in the most part, you're going to wipe clean just about everything you make. And you pay very little to no taxes, which is an advantage to the job. We had a guy talking the other day. He was on here, or he has a channel, and he was talking about the pros and cons of a W-2 versus a expediter, and the same thing would be a courier, but he putting in all these hours and this and that, and if you made $10 an hour, you'd be ahead. No, you're not. Here's why. Well, if you had $10 an hour and you got 20 hours overtime a week, okay, 40 plus 10 is 150, so you make $550 a week. Whoopee. I made $510 Friday. Yippee. You have more opportunities to make money here than you will there. Now, am I going to make $510 every day? No. I might do it today, though. We will find out here shortly, but there's a good chance I'll get that again today. But the thing is that it's not going to happen every day. But I do make $400 a day. Every day. So you've got to see which tax advantage is best for you. And like I said, maintenance and everything, you can either A, itemize it, or take the mileage. One or two ways, and after that, you're pretty much done. Now, you also can depreciate your vehicle. 3 years, depreciate it away. But I tell people, get a good tax accountant that understands what you're doing, and work with them, and use them every year, and you may pay a fee, and that's all right. That's a tax deduction too. Something else you need to think about, and no one's ever talked about this, but what do you do for insurance if your wife isn't working, or your husband, and and everything, and you're just out there on your own? What do you do for insurance? I hate to say it, Obamacare. Ugh. It's insurance. Hey, gotta have insurance. But that's your insurance. Well, let's talk retirement. What are you gonna do? Well, a Roth IRA is what I tell you to invest in. Roth IRA. Why a Roth? Well, because a Roth IRA is, you've paid taxes on the money once. In other words, you take, say, $100 a week out of your check, and you deposit it into a Roth IRA weekly. Okay? It's like $5,200 a year. I think you're allowed $5,000. Unless you're older, then you can go up to 10 to make up. But when you start to take the money out, you're not taxed on it the second time. You were pre-taxed in. So when you go to take money out, you don't have to pay taxes on it. So that's why I recommend a Roth IRA. Because when you take your money, put it out, it's supposedly already pre-taxed, and you will do your taxes and all that, and you'll pay what you do, or if you don't pay anything, it's goes in. When you take the money back out, you don't pay any taxes on it. And you need to start making sure you're putting those acorns in the tree, because you don't want to get up there in age and find out there's no acorns in the tree. That isn't good. So you got to take care of your retirement, your health insurance, maintenance of your vehicle, all that stuff yourself. So remember that when you're out here. I always talk about a good emergency fund. You're going to need it. Why? Because something's going to break. Well, just look at it this way. I had shocks, mountain balance, a wheel, and a new tire. $200. Had you went in there and done the work and it'd have been $300 to $400 if you'd had not done the work yourself, not including the oil change. But if you take the oil change, that was $245. I say $250. But you'd have been easily figuring shocks, $200, oil change, 70s, make it 75, $275, $300 or better. You're saving money doing a lot of this work yourself. That's why I tell you to, watch YouTube. This stuff's easy. Some of the stuff you just, it's just popping a nut, draining the oil, sticking the filter back on, pour it back in, take it back, and drop it off at Walmart. There, you're done. Do your own. I use really good stuff in mine. But all that is a write-off for your taxes. If you itemize your taxes and you don't take the mileage deduction, you keep track of every one of those expenses. And you can write it off your taxes. But for the most part, tax-wise, you're not going to be paying anything. And that helps your bottom line because of all these expenses. Now, the same as in trucking, expediting, and courier driving, the same deductions. Now, you do get a different deduction as being an expediter or a trucker that you don't get as a courier, and that's called a per diem. In other words, you're allowed, I think it's $58 a day in Ohio, because it's different state to state, a per diem for your food when you're on the road. You get to write that off. They give you like $58 a day tax write-off. So that helps too. But as a courier, you don't get that because you're not staying overnight in places and living in your van and all that stuff. So you get that automatically. You have to check with your state, see how much it is. I think Ohio's 58. So if you're out on the road, say 200 days that year, it's 10, 11, 12, 10, 11,600. you get to write off. So it's a nice little deduction. And you don't have to eat at a restaurant. You don't have to keep the receipts. You don't have to do any of it. You just have to claim it. That's why a good trucking transportation accountant saves you money. They'll know all that. So, in conclusion, you can either A, take the mileage. I think it's 56.5 cents or 56, somewhere in there. Don't bother with the records, except for your phone. Keep that one. You have to worry about the maintenance on the vehicle and keeping all the receipts. Excuse me. Or keep all the receipts, add them up, see which one gives you the best bet. Either way, you can do either or. You can't do them both. You can do either one or the other. You can claim the mileage, or you can add up your receipts and claim that. With gas prices going up, who knows which is going to be best at this point, to be honest. But, you know. So, well, in conclusion, I got to go. I am getting ready to pick up my stuff here. There it is. Later.